Good morning. My name is Mark Donohue, and most of you know me, but this has been an incredible 8-day journey into volatility. I would say 101, but it's more like a 501 class. It's really been something to witness, and it all has to do with the changing tariff policy in our country toward the rest of the world. Let's start out with the basics. What is a tariff? A tariff is a tax on a good that's coming into a country because that country, in our case, the United States, doesn't want competition for our local suppliers. The easy one is cars. A good example is when cars come in from Europe, there's a 5% tariff on it. Now, as it turns out, when we send cars to Europe, they charge a 25% tariff on us. Now, it's what's out there in the ether, so to speak, is a lot of fear. You hear stories of recession, fear of inflation, fear of a trade war. It's fear of the unknown. Literally, I heard an economist the other day say something, and it was true. He said, all I ever learned about trade or tariffs was this. Number one, tariffs, a free trade is good. Tariffs are bad, and a trade war is a disaster. Well, that's kind of what I was taught. The professors who taught me grew up in the Depression. There's not a lot of experts out there. We've had recent history in the first Trump administration, but that's proven to not fall in line with a lot of the narratives we're seeing today. Okay, so let's talk about fair trade and what that means. The example I gave earlier. It's clearly fair trade for us to try to send cars to Europe and they send cars over here. But is it really fair to us? Okay, so that's kind of what this is all about. And there's a reordering going on of the trade system in the world. Obviously, today, we're going to be talking about tariffs and trade. And if you're like most people, you've been watching kind of with one eye open and one eye closed because it's kind of scary out there. Okay, it really is. The headlines, all the end of the world situation, it's really kind of disappointing. So you have a situation where the headlines are very loud, markets are jumpy, and for now, the reciprocal tariffs are on pause. We'll probably always have tariffs on China, but we'll get along with that in a few minutes. Okay. Now, I think it's important that we review something here. The media we grew up with, most of you watching watched the Walter Cronkites of the world, but I think what is different before we go to the next slide is we've come to a point where our media, it's all the what if. If you listen closely, what if these tariffs stay in place? What will that do in terms of recession or inflation? That's not what we grew up with. Let's go to the next slide. I don't ever remember Walter Cronkite or John Chancellor saying, what if? I don't remember them saying, I think either. Okay, but that's the world we live in. Now, these two gentlemen who gave us the news in a half an hour, and now we have 24/7 cable, in a half an hour, we found out what was necessary, true, and factual. But the sad part, the thing that these guys have in common is that they passed away. And I'm afraid factual news media coverage kind of died with them and other ones of their generation. The sky is always falling in today's media, and there's a very good example of that, of the what if. What if, or will, I should say, tariffs bring inflation? Well, they didn't last time. Let me give you an example of something. MIT did a study of the first Trump administration, and the average inflation for the 4 years was 1.9%. Of that, 0.2%, 0.2% of that was because of the tariffs. Okay, so can tariffs bring inflation? Yes. If tariffs go up and they're never brought down, they're never negotiated, yes. But did they bring inflation in the most recent time period? And the answer is no, they didn't. Now, there's a lot going on in the world, but I want to set the stage on something. At the end of World War II, there was one country that wasn't destroyed, either physically or financially or both, and that was us. We had the factories. We were happy to ship things all over the world. We were happy to do the Marshall Plan, which was great for us, as well as being great for Europe and Japan. But some people are saying, that's been World War II ended 80 years ago. Now, we also remember, as a part of this growing up, when the Volkswagen Beetle came over here. And when we bought stuff that was cheap, at that time it came from Japan. Okay. So we have to keep a little perspective here. And to do that, we want to show you tariff revenue as a share of federal receipts. You can see is not very much. If you look at the far right-hand side, it was about 1%, and now it's about 2%. Maybe that'll go up 3 or 4%. But you see over time, the federal receipts changed as we started to move toward an income tax, which was in 1913. Also, in 1913, we had the Federal Reserve. Okay, so back then, if you earned $6,000 a year, you were subject to a tax. The vast majority of Americans did not. So it truly was just paid by the wealthy, so to speak. I like this next chart. This really kind of gives you a good feel for what's going on out there. Germany is a country, 43% of their GDP is on exports. I mean, they are very vulnerable to tariffs. Our good friends Canada, 33%. Our ally Japan, 22%. And China's 20%, but that's a little deceptive because China's 20% of their GDP is way more than Germany's 33% of their GDP. We as a country, our GDP in terms of exports is about 11%. A lot of that's agriculture, a lot of it's energy. Our three big trading partners, you already know this has been fairly reported, Mexico, Canada, and China. There are geopolitical things happening. This administration wants to stop the illegal drugs, the illegal immigration. That's a big part of it. I haven't really talked to anybody who doesn't think at the end of the day, Canada, Mexico, and the United States will work out a nearly free trade zone before it's all over. China, not so much. Now, before we leave this slide, China is about 13% of all of our imports, but it's only less than 1.5% of our GDP. Clearly, China needs us. The world needs us way more than we need them. Okay? Okay. Perception is more important than anything these days. And let's take a look at the next slide to see what that brings us. This is a slightly different look at it. I wish cable news would put this up every day, okay? You can see by this that India, who's our friend, charges us 17% tariff. We want to ship something over there. South Korea, our ally, is about 13.4%. China, on average, is about 7.5%. What country is the most open to imports in the world? By far, it's us. Part of that reason is we have more money, we want to buy more things, and that's natural. Now, the latest media narratives are almost always wrong, but let's use this as an example. And let's say the tariffs on China is 100%. So China is going to go to Walmart and say, well, I've got to double my prices to you. And Walmart has already said, that's your problem. If you want to double your prices to us, we'll buy this cheaper stuff from Vietnam or Indonesia. The media doesn't understand this. It's not an automatic add-on. There's pushback, there's negotiation, and I'm talking more than the negotiation that may occur in the next 90 to 180 days with our allies, okay? So China, I would not want to be in China's shoes at this point. Now, there's a lot of factors that go into our economy, the decisions we're making, our debt, the interest rates we're paying on that debt, the interest rates we're paying on our mortgages. Regulation is a very big part of a broader story here. And let's move on to the next one. Again, history of tariffs. As I said earlier, they've become less important. But one of the narratives that's out there is the Smoot-Hawley Tariff Act. I always mispronounce that. Was believed at the time to have caused the Great Depression. What we now know is the Federal Reserve caused the Great Depression because when business started to pull back, they cut off the money supply. Think back to every stock market gyration we've had, whether it was Lehman Brothers, whether it was 9/11 before that, or whether it was COVID. What happened? The Fed flooded our economy with cash. They did just the opposite in the Depression, and that's why all the banks failed. So that's a narrative out there that I don't think really applies 95 years later. Okay, what has tariffs done in terms of the federal budget? Well, the Trump era tariffs, which were continued in the Biden administration, actually increased on China a little bit, have brought in $30 to $60 billion a year to our coffers. We're glad to have that money. It's not enough to balance our budget, but it's been a net revenue gain so far. And this next chart just kind of puts the whole thing together. Basically, tariffs as a percentage of what we bring in is just minuscule. Okay, it's about 2% of our revenue. Now, okay, the world has changed. I think this is a good a point to add something here. This whole conversation now is about goods, physical goods that are coming into the country. You know, we see China as the big dog out there in terms of exporting. You know, the biggest dog in the world is? It's us. But what we export are financial services, we export technology, telecommunications. So the United States has, we export way more of those things to those other countries, our major trading partners, than they do to us. So on balance, it's not as bad as when you look at just the hard goods that come in here. Now, this I think is going to surprise you here. If I told you that construction on manufacturing is up 3 times today what it was 2 years ago, you'd say, how can that be? There's a lot of bipartisan agreement. Both sides of the aisle want to decouple from China. Both sides of the aisle want to bring more jobs, manufacturing jobs in particular, back to the United States. Because of the Inflation Reduction Act and the CHIPS Act, you've seen a major boom in construction. Okay, there's a big plant in Columbus, there's one in Arizona, it's all over. Okay, so I think this whole situation kind of plays into the data centers. Those of us in Florida drive around on the interstate. Some of every exit, there's a giant data center. Part of that is artificial intelligence. That requires a lot more energy, but it's a different world than it was in 1930. So if somebody on TV says, back in 1930, flip the channel, they're really missing the whole boat. Okay. Why did manufacturing leave the United States? Well, for cheap labor, as we can see in the next chart. Don't try to read this. It's really, it's like spaghetti. It's like watching a hurricane chart, people saying where the hurricane's going to hit. But originally Japan, then China, Korea, India, Indonesia, now Vietnam, had a abundance of cheap labor. So it made sense for American manufacturing to go to foreign countries, set up a factory there, had cheap labor, everything was good. Two things. The labor's not so cheap anymore, and it's very much not abundant anymore. Those countries, Europe, Japan, shrinks in population every year. So with the advent of AI technology, it really, many people think, negates the former advantage of cheap labor some of these countries have. As one economist put it, if you're going to build an AI plant to do whatever, why would you build it in Vietnam when you can build it in Saginaw, Michigan? It makes no sense. So I think it's going to be a long process. But regardless of what one political party or one president is saying, this is economics moving forward with or without political leaders around the world. And I think that spells good things for us. Now, what about the federal budget? We always like to talk about that. And the DOGE is very controversial. I would caution you in this respect. Do you think that Congress has the guts to go in and cut out waste? I can see the head shaking no. Remember, if you're a certain age, the Grace Report, you're looking at a nerd who actually read the Grace Report. I think it came out in 1982 in the Reagan administration. If Congress had had the guts to do that and administration the guts to sign it and follow through, we wouldn't have a $35 trillion debt in our country. We wouldn't, but we didn't. So Elon Musk has become a lightning rod. He is receiving criticism, but not what his team is finding, okay? They're finding things that you never believe. And I've heard it also said by some economists that work in Washington, away from the cameras, both sides agree there really is about $350 billion a year being sent out, and we don't know where it's going. That's fixable, but we have to have a little courage. Democrats, independents, and Republicans want to get rid of the waste. And this is the only way it's going to happen. I'm sure Congress at some point will approve a budget, which they have not done for years. They've done continuing resolutions. And when they do, the DOGE findings and savings will be in there. So how do we get out of our debt mess? Well, we have to get rid of waste and fraud. And I think that's what DOGE is trying to do. We have to grow our economy, and you grow your economy by including or encouraging growth by maybe rolling back some of the regulations that have strangled business in the past. And if you do that and you cut some government spending that's wasteful, you will lower interest rates. Therefore, we will be paying as a country less in interest on the national debt. Okay. Some people have said something along the lines of the Fed might intervene. That's one of the scare tactics. I think that'd be unlikely for the Fed to intervene at this point, because the markets have certainly not frozen up. Okay. Now, I think at this point, we're going to go to your questions and questions that we've received from clients ahead of this. And Ashley, ask away. Okay, what can importers of goods, what can China do to continue to do a lot of business with us? Well, they have to cut their profit margins. They're doing very well. They have to be competitive. There's other competitors out there. So in a way, I don't mean to be snarky when I say this, but that's their problem. We are the consumers. We want to buy. Maybe we'll pay a little more for certain goods, but not to the extent that they want to pass along the tariffs to us.
I keep hearing we are terrifying all of our allies, but why not enemies like Russia and North Korea?
Okay. When you hear this question, when I first heard it, I go, yeah, what's up with that? We're not tariffing Russia and North Korea because I don't think we bring anything in from North Korea, and those countries are under sanctions for their bad behavior. Some small amount of Russian oil may work its way to our cars, but not much. So those are sanctioned countries. We've put out tariffs on our friends because we need to reorder and get a fairer deal for everybody.
Can we ever get our budget under control?
Well, we kind of answered that a little bit in the previous slide. I'd like to be an optimist and say yes. Control is a funny word. If we can just, and you've heard this expression before, bend the spending curve. In the past, there's one thing people think that when you cut taxes, and I think maybe we should talk about that now. When you cut taxes, that hurts the budget. Usually, when tax cuts happen, revenues increase, but Congress spends even more. Now, let's talk about taxes while I'm on that. What's being discussed now is the taxes we've had for 4 years, 5 years, renewing that. All the same. Nobody's getting a tax break on that. It's the same taxes we've had for 5 years. The real tax cuts are coming in the form of not having to pay tax on Social Security, overtime wages, and tips. Believe me, that will stimulate the economy, very much so, because people will spend that. I intend to spend my Social Security tax that I will be saving if that becomes law. And I think there's a very good chance that will become law in the next 60 to 90 days. Ashley?
Is there really as much fraud as Doge says there is?
I, for one, am afraid that there is. It's so funny. We all grew up with $500 toilet seats. You remember that back in the day for jets? Why do we think that's not there now? And why do we think it's better now? So sadly, maybe we're not much different, and this hurts, than a Bolivia or a Colombia. I hope the difference is that we can attack our fraud and waste and really get rid of it. These auditors that are on the case, and it's not Musk, these people are going to be with us for a long time. And their whole job is to find waste. And I think they'll find a lot of it.
As we discussed before, common question, don't tariffs always cause inflation?
Don't tariffs always cause inflation? I'll do a what if. What if all these tariffs stayed? And what if there was never any negotiation? And what if every supplier, like Walmart, just folded like a cheap suit? Yes, there would be inflation. I think it's really overestimated by all the different people I hear and talk to and meetings that Dave and I attend. Could it go up a little? Yes. I'll give an example. If Louise and I, in our 70s, wanted to buy an expensive import car, and now because of the tariffs, it's going to cost $10,000 more. And Louise said, Mark, you're not getting younger, let's buy that car. And we go buy it. What are we going to do? What's going to happen in the Donohue household? We ain't going to go out to eat as much. We're not going to take a 3-week vacation. We're going to start to watch our pennies because we've spent our money on the inflationary car, but we're going to spend less in other places. So that's something that would tend to balance out. I think when people think of that, they're discounting the smart of us as consumers. But we'll find a way to get what we need and want and get the best price. Ashley? Okay, I think I kind of got ahead of you on that question. I should have waited for the actual question. I think you're going to see revenues continue to increase federal revenues from the current taxation, even if they pass these Social Security tax cuts as well, because the economy is growing. If the economy should slip into a deep recession, then revenues would fall. But you know, it's the old story. If you taxed capital gains at 90% instead of, I think, 25, who would ever sell an asset if you had to give 90% away in tax? But at 25%, an investor might say, well, I'll sell that stock and pay 25% tax, and I'll move on and buy something else. So that's how the economy grows. So we'll have that debate this time, but I think it's kind of a debate we've had. And the numbers really show that the more you boost the economy, the more revenue you get. And cutting taxes has always boosted the economy. It did it for Kennedy, it did it for Reagan, it did it for Bush, but it's the spending. You've got to stop the spending. And again, I'm hopeful for the first time in many years, there will actually be a budget in Congress as opposed to continuing resolution. Any other questions out there from our folks that were watching? Okay, I hope you've enjoyed this. I hope it's been illustrated a few things for you. I know I'm not Brian Westbury or any professional that does this for a living, but we hope this has helped you. And please feel free to call us if you have any questions. And thanks very much for tuning in.